Hey, welcome. Today, we are diving deep into one of the most powerful, game-changing concepts in trading. We're going to talk about how to spot a real market move from a fake one. Because let's be honest, a price breakout is only the real deal when the volume backs it up. So let's get right into it.
If you remember one thing from this whole explainer, make it this. Market price can and absolutely will lie to you. It sets traps, it gives you false hope, but volume? Volume tells the unfiltered truth about the money and the conviction behind any move. Getting this one idea down will totally change how you look at the charts. All right, so let's start with something every single trader has felt before, the fake breakout, right? It looks absolutely perfect. You jump in, you get excited, and then poof, it just collapses. So why does this happen over and over again? Well, it all comes down to what's really going on just underneath that price action.
Okay, so this slide just lays it out perfectly, the two worlds we're talking about. Over on the left, that's the trap. You see the price kind of creeping up, but look down. The volume is dead silent. That move is built on nothing but hopes and dreams. But on the right, that's the real deal. The price explodes higher, and it's confirmed by a huge, undeniable spike in volume. That right there is conviction. That is the smart money showing its hand.
You got to think about it this way. A big, impressive-looking green candle without any real volume behind it, it's just hot air. It might look good for a second, but there's no real power, no actual capital pushing it forward. It's an illusion, and it's an illusion that is destined to just fade away.
So, if price can lie to us, where do we find the truth? You guessed it, in the volume. Volume is really the secret to telling the difference between a high-probability trade and just a random guess. It's the fuel that powers every single real move in the market.
Honestly, this is the best way to think about volume. It is literally the fuel for a market breakout. If there's no fuel in the tank, that price move is never going to achieve liftoff. But if there's tons of fuel, well, that trend can go ballistic. It's really that simple.
And here's why this is so crucial. Volume cuts through all the noise. It shows you exactly where the real shifts in supply and demand are happening. It tells you where the big institutions are placing their bets. Ultimately, volume confirms the intention behind a price move, and that's what turns a hopeful guess into a high-conviction trade.
And here's the beautiful part. When the big players, the institutions, the ones that actually move the market, when they make their trades, they can't do it quietly. Their orders are just too big. Their size leaves these massive, unavoidable footprints all over the volume data. And our job, as smart traders, is just to learn how to read those footprints.
So that brings us to the really good stuff. How do we actually read these institutional footprints on a chart? Let's break down the key signals that scream, hey, the smart money is getting in on this.
Okay, the first signal is the most obvious one, and it's the volume spike. Now, we're not talking about a little uptick here. We're looking for a sudden, dramatic surge. Think 2, 3, maybe even 5 times the recent average volume. That's not your average trader. That is the unmistakable footprint of an institution making a major move.
Next up is what we call a demand candle. And this isn't just any old green candle. We're looking for a wide, powerful candle that closes way up near its high, and, you guessed it, it's backed by huge volume. This candle tells a very clear story. For that whole trading session, the buyers were in complete and total control. It's a massive signal of institutional accumulation.
Finally, we have the clean volume pattern. This is like the textbook A+ setup. You'll see price just kind of moving sideways, consolidating, and the volume is super low. We call it dry. What's happening? The institutions are quietly buying up shares without anyone noticing. Then, at the exact moment of the breakout, boom, the volume explodes. They finally reveal their hand in one powerful, decisive move.
All right, so we've gone through all the theory. Now, let's get practical. I'm about to give you a simple but incredibly powerful checklist that you can use to confirm whether a volume breakout is the real deal or just another trap.
But before we even get to the full list, let's talk about rule number 1, the absolute, non-negotiable, most important rule. The volume on that breakout candle has to be, at a bare minimum, double the recent average. If it isn't, you just walk away. It's that critical. No exceptions.
Okay, here's the full 6-point system. Step 1, you already know it. Volume has to be over 2 times the average. Step 2, make sure that candle is actually breaking a key price level. Step 3, this should happen after a quiet period of consolidation. Step 4, look at the breakout candle itself. You want to see small wicks, which shows real decisiveness. Now for the pro steps. Step 5, look for a retest of that breakout level on low volume. And finally, step 6, you want to see a continuation candle that appears with rising volume. If you can check all 6 of these boxes, you've got yourself a seriously high probability setup.
This leads me to a pro tip that can save you from so many headaches. The absolute best, safest entry isn't chasing that first big breakout candle. No, it's waiting patiently for the price to pull back and retest that level it just broke. Why? Because if that retest happens on really low volume, it's a massive confirmation. It's telling you that the sellers have no power left and that the institutional buyers are still in control, defending their new position.
So well, we have covered a lot. We've gone from seeing how price can trick you to understanding the undeniable truth of volume. And you know, this knowledge really gives you a choice. It can fundamentally transform your entire approach to trading.
If you take away just one thing, let it be this. A breakout based on price alone is temporary. It's a trap waiting to happen. But a breakout that is confirmed by a massive surge in volume, that is sustainable. That is the beginning of a real trend.
So I'll leave you with this question. The next time you pull up a chart, are you going to keep chasing the story that the price is telling you? Or are you going to start reading the truth that's written plain as day in the volume? The choice is yours. Thanks for tuning in.